What is inflation? How does it impact your wealth and the general economy? Welcome to CB Tips, Wealth Management Edition, where we provide you with valuable information and advice, whether you're a seasoned investor or someone who's just getting started in this big financial field. Inflation refers to increase in prices in an economy. It measures how much more expensive a set of goods and services has become over a certain period, which is usually a year. In simple terms, it means that an item that previously costs 10 Qatari riyals may now cost 11 Qatari riyals today, due to high demand and other factors. Is inflation always a bad thing? While high inflation can be harmful, too little inflation can also weaken the economy. When an economy is struggling and inflation is too low, central banks may decide to lower interest rates to fuel business growth since borrowing becomes cheaper. Central banks use interest rates to control demand and inflation. If inflation is high, they raise the interest rates, as we have seen in the past year. Higher interest rates make borrowing costs less attractive for firms and consumers, which leads to less demand for goods and investment. Higher interest rates also make it more attractive to place money in the bank, reducing the circulation of money in the economy for buying goods and services, which ultimately lowers inflation. So, what has been causing inflation lately? These past 2 years witnessed high inflation globally, resulting in central banks around the world increasing interest rates frequently. This was due to various events such as the pandemic, geopolitical issues around the world, rising energy prices, and supply chain constraints. But how does inflation impact your wealth? Over the long term, inflation erodes the purchasing power of your income and wealth. This means that an amount saved but not generating a return higher than the rate of inflation means that your accumulated wealth may buy you less and less with the mere passage of time. And those who put off saving and investing are impacted even more. So, what can you do to protect your wealth from the effect of inflation? There are ways to fight it by having investments with potential return exceeding the inflation rate. You can do this by diversifying your portfolio, spreading your assets across a variety of investments that may respond differently to market conditions. However, diversification does not guarantee a profit or protection against a loss. It is a method used to help manage investments and inflation risk. Don't forget to join us each week as we dive into the world of personal finance and wealth management. Thank you for tuning in, and we'll see you next time.